Cause the IRL birds attract IRL cops. And you can't be making money if you IRL lock. IRL drug money hitting up the market. If you knew how rich these motherfuckers were, you wouldn't list for profit. Let me tell you what go down in trap houses where the fiends knocking at your door cause you a coke fountain. My boy did a grand every hour on the hour. Now he thugging with a thug bro, said he trying to stop the
All right, ladies and gentlemen, boys and girls, we are now live, episode 5 of the Thug Birds. Live and direct, we got the man himself, the Crypto CPA, coming in hot, live and direct. Let's get to it. What's going on, fellas? We're live now. We have our guest, the Crypto CPA, Shahan, here for the 5th episode. So first off, thank you very much for coming on and being on the podcast, and hopefully your day is going well so far. So welcome, first off.
Yeah, thanks for having me.
Definitely not a problem. For some people who will be tuning in and listening, some are going to be live, some will just be listening in. Yeah, so first off, who are you? What do you do? How long you been in the crypto, I guess, area, and in the finance, basically, area? How?
Yeah, I'll just be quick. So I'm a CPA. I've been a CPA for like nearly a decade now. Started focusing on crypto since I would say 2017, and head of tax strategy at CoinTracker, which is a crypto tax software tool that you guys might have heard of.
Yep.
Heard that. I guess the first question, honestly, for me, what got you? I'm gonna guess you've always been a CPA. What got you into the crypto side of CPA? Have you always been interested in, I guess, technology, crypto, stuff like that, or what was the initial thought there?
Yeah, I think initially I first became an investor. Just wanted to see what this space was all about, and because I was a CPA, kind of started looking into more about taxation and etc. like several years ago. And then kind of got hooked into the space, with DeFi, now NFTs and etc. So yeah.
Heard that. I mean, for really the basic of the questions at first, and then we'll probably get a little bit more in depth on that. On the most part, what would be, I guess, taxable on in the crypto world as of? I will start with NFTs, I guess. So I think I read on your Twitter post that it doesn't matter if it's an NFT or anything like that. Any transaction is basically taxable. Is that correct, or what's the? I guess.
Yeah, so the NFTs, just similar to any other cryptocurrency, the IRS is treating them as a property. So there are a few situations where you could have a tax obligation. First, like when you trade NFT to another NFT, that creates a taxable event. When you cash out an NFT, you're selling an NFT, you're receiving cash or like Ethereum or something like that. That triggers taxes. When you earn royalties from an NFT, that also triggers taxes. So those are some situations in the NFT space that if you do them, you could have a tax obligation.
Heard that, and that's like with everyone, because I know basically with say trading things like that, with honestly people have like the bots doing selling trading multiple times, basically a day, minutes wise. Honestly, is it that like each one of those are like a taxable event on that one, or is it just like a lump sum and that nature of it? I guess how would that be?
Yeah, I mean, unfortunately, it's taxation happen per transaction basis. So yeah, I mean, if you're doing like a lot of trades every day or on a monthly basis, it's going to be really hard for you to do this manually. And there are tools that help you kind of track these things, like your cost base, your market value, and the gains and losses, which you can later use that to file your taxes. But yeah, to answer your question, you had to track your taxes per transaction basis.
Which one? Heard
I
that.
have a question. I have a friend, okay, and he does a lot of NFT trading, and he does it like every day, multiple transactions, and he's been doing it for months, and he hasn't kept any records at all. And how is he going to go about um when it comes to tax time, you know, getting everything in order?
Yeah, I mean, good question because tax time is coming up in several months. January is around the corner. What I would suggest him to do is he might be doing these transactions most likely in a MetaMask account or any type of non-custodial account. So you would connect your account to to a tool like CoinTracker. It's just a matter of
Okay.
kind of copying and pasting your account address, and tools like CoinTracker, we can kind of figure out everything that happened inside the wallet since
Okay.
the initiation and the cost base and market value, and then you can produce your tax reports.
Awesome.
Heard that. And I guess that would be with kind of regular crypto stuff as well, because I don't know if I should say because I'm live and everything, but like the first year I didn't put any taxes on there. Granted, I didn't take anything out because initially, like back in 2017, I was thinking, hey, I'm the person I'm putting in there and holding, honestly, where I would have BTC. I might have that to like Ethereum, because the BTC went up a little bit on there. Kind of how P-Doc was asking. Is there, I guess, the same type of way? Do we, if we haven't done it on the past, like, is there a way to go back and do them that way, or I guess is there a way to backtrack in that nature of it?
Yeah, I mean, so if you use a tool like CoinTracker, yeah, as soon as you connect like a wallet or exchange,
It does.
it tells you transaction that happens from the beginning, um, and then so that's one. Yeah, the answer is yes, but then you had to decide whether to go back and amend the return, because if, let's say, for example, again, don't take this as tax advice, but let's say you had an income of like, I don't know, for example, $1 million in 2017, but after connecting your wallet to CoinTracker, you found out that maybe $500 was omitted from your return. So in that case, does it make sense to amend the return? In my opinion, no. It's just such a small portion of your income, when you compare to your entire tax profile. So you just have to kind of go through that analysis. Just because you didn't forget to report anything doesn't mean that you really, really had to go and amend the return. You just had to talk to a qualified CPA to kind of take their advice.
Okay, I heard that. The question you might be able to answer, and of course not financial advice or anything like that. Are there like averages on like CPAs, what they charge for people who are just not getting into crypto, don't know stuff like that? Or because I'm sure time is money, of course. So is there an average in that essence of it, or what are the best ways to find, I guess, a crypto CPA?
Yeah, I mean, I would say here's how I would approach that question. So most people have, I would say, like simple taxes. They have their W-2s and maybe some crypto on the side. For those people, you don't really need a CPA, to be honest with you. You can use a tool like CoinTracker and just download the report and literally drag and drop into TurboTax, and it files your taxes. So I would say the majority of the people in the US right now in the crypto space kind of fall into that category, who can still use like a DIY type of software. But if if you're like a whale, if you have I don't know, multiple wallets and business entities, corporations, etc., in those cases, I would seek out for a CPA. And then the prices vary mainly based on the how big the CPA's firm is. Like you have like from big four to mid-size to small to just mom and pop shop to etc. And also you had to find a CPA who's who's familiar with crypto. So those people are really hard to find. Hourly range in the industry could range from from $150 to $200 an hour to like $1,000-$1,500 an hour. So it's a wide spectrum.
For sure.
So yeah, it's really hard to give an answer, but kind of average price that you would expect. But I think my advice is that for most of you guys, like if you can file your taxes using a tool like obviously CoinTracker and also something like TurboTax, you should be able to file with no issue.
Hey, that. For I don't know, I guess for both of y'all, I mean, and for the thing CoinTracker, because some people, I'll be honest, other than looking at some of the information on there, again, because on the crypto world, I don't know too much of that. I mean, I guess you kind of explained it, but what would CoinTracker be? Just tracks your coins, basically. Simple as that.
Yeah, it's essentially CoinTracker is a platform like you connect your wallets, exchanges, blockchains, and even MetaMask with NFTs and etc. It's a program that kind of reconciles all your cost basis, history, and etc., and gives you the tax report that you need to file with your Form 1040, which you file on by April 15th. So that's a simple software product. Yeah.
I gotcha. Heard that. I mean, just another question in general. With the I guess if you transfer it from like just one wallet to another wallet, other than like transaction fees, say if you're going from like a Binance to a FTX or vice versa, things like that, are things like that transferable taxable? Or is that just, hey, it's going from one bank essence to another bank, so there's no tax on that? Or how would that work?
Yeah, I would see it as the example that you mentioned. You're just transferring your money from one bank account to another, which is not a taxable event. Same case with crypto. You could transfer your crypto from MetaMask to Coinbase to Binance. It's not taxable as long as those two accounts belong to you.
I have a question. What? Oh, I forget my question. Go ahead, guys. I'll remember it. I'll remember.
You're good. You're good.
Oh yeah. So I remember now. So every time, so we know what happens when let's say we buy an NFT, at like 1 sol, right? And then it goes up to like 100 sol, and we make a bunch of profit. We all know that we got to pay taxes on that. What happens there? What happens when we book a loss? Like, how does that work? As far as tax, claiming that.
Yeah, so losses are good for tax purposes at least. So there's losses you can use that to offset your other gains.
Okay.
Those gains could include NFT gains, crypto gains, stock gains, and even in some cases like your W2 income. So losses offset them. So when you offset your income, you end up paying less taxes.
So if I lose on an NFT trade, can I claim it? Like, do my trades on, like, let's say like a centralized exchange like Bybit, do those get lumped in with the same taxes as like my NFT trades? Like, is it all kind of the same thing, and I have to book it all and just like see what's plus and negative at the end of it all?
That is correct. So in your tax return, it doesn't care like where things happen, like all
Okay.
those activities, they just get lumped into one form. So
And there's no different like percentage right now, versus like NFT versus like a coin trade. Basically, it's all the same thing.
it is, I would say for the most part, it is the same, the tax rates. One thing is that, if you're dealing with NFTs based on like artwork, they could be treated as this thing called collectibles. So
Okay.
collectibles have like a higher tax rate in the tax code. It's like it's gonna get taxed at 28% for high
Wow.
income earners.
Right.
So that's a maximum tax rate for collectibles, but for maximum tax rate for just regular crypto, it's like 20%. So there's an 8% difference.
What's
if you do
considered a
that.
high earner?
I don't remember the income on top of my head, but it's roughly
Is it
once
like
you reach like
millions
400.
though? Like,
No, it's way below that. It's like 400K, 450K,
oh,
depending on
okay.
your filing status. Yeah.
Okay.
Yeah, question on that one, because basically before this I was on crypto your basically kind of page looking at some stuff, and I think it was just a picture from the tax bracket and the rates for the 2021. And you don't have to quote it because I know you might not have it in front of you, but like with that one, on mine it says single, for single and married household, stuff like that. For this example, because I'm single. So on each of those tax and things, like on 10% it says up to $9,950. Is it 10% on each of those transactions as long as it's under that amount, or I guess how would that work on?
Yeah,
on there?
it's a hard thing to explain like without like you kind of looking at it like a Form 1040, but at a high level, you have your W2 income, you have your, let's say, like your other stock income, and then you have your crypto short-term gains and etc.
Gotcha.
So you have that total income, and the government gives you like a standard deduction, which is like a 12,400 if you're single, 24,000 or something like that if you're married. So you start with your income, you deduct that standard deduction, and then after you get to claim other credits and etc. And deductions and etc. And then you come up with this thing called taxable income.
Mm-hmm.
That taxable income is subject to those tables that you're referring to. So if it falls below inside that table, you have the lower limit plus whatever the percentage. That's how we figure out the taxes. The point is that it's not like your income multiplied by a rate. It just doesn't work like that in taxes. It's a little complicated.
No, for sure on that one. Kind of I guess jumping around as well, because I was writing some notes as well, and you were talking about like the high income earner. Is there a difference on, I guess, like the creators and investors on the taxes? And if so, I guess what is the difference on that? And is it also to the, I guess, add to that one? Is it for crypto and like NFTs, or is it just like coin wise? But how is that taxed differently?
Yeah, so in the case of coins, I mean, there's no such thing as creators. I mean, sure, I mean there could be like ICO project, but that's a different conversation. NFTs, yes, I think so. It's the creators and investors, they have different tax treatments. So if you're an investor, your tax treatment is very similar to trading coins. You have capital gains and capital losses. If you're a creator, you have ordinary income, meaning like, as soon as you sell something, you get that income. So there's no like capital gain or capital loss type of treatment. So what I mean by that is if you're a creator, you're subject to a little bit of higher tax rate.
Okay.
So you got to pay income taxes, you got to pay sometimes self-employment taxes. Those are the downside. But the good side is that if you're a creator, like a full-time person, you can deduct all the business-related expenses. It could be, I don't know, it could be a computer, maybe some subscriptions. If you're paying for contractors, you get to deduct those business expenses, and then you pay taxes on the net income.
Nice. Heard that. Take a look. Yeah, I was gonna ask another one, but I think the that coin tracker was a big one. I was gonna ask like some of the best practices that people can, I guess, do for keeping track of the taxes. But I'm assuming it would be coin tracker. That's the way to go.
I mean, so I would say number one thing, like a lot of people think that when you go from one coin to another, or like, when you trade NFT to NFT, people think that they don't have to pay taxes because they never received any cash. But that's not the case. So as soon as you go from one NFT to another, and if you made a profit in Ethereum, what I would do is just roughly, liquidate roughly 20% of your profit and just put it on a stable coin. So that way you have money that doesn't fluctuate in value to
Yeah.
tax liability towards the end of the year. So that's what I would do, especially if you're making a lot of money. And I think in this market, like, a lot of people are making money on NFTs. And after that, I would definitely connect your wallets and exchanges to like CoinTracker, because as soon as you have multiple wallets and multiple trades, it becomes virtually impossible for you to do this manually. There's absolutely no way. Because if you really look at like a transaction on, for example, OpenSea, there's a gas fee related taxes. There's a conversion that happens sometimes if you're buying from something like, Ethereum to wrapped Ethereum or something like that. So there's multiple transactions that happens, when you buy an NFT. So I would recommend using a tool like CoinTracker, because you can track them and figure out your taxes at the end of the year.
Can CoinTracker do Solana yet?
No, we don't do Solana yet, but that's a blockchain that we have received a lot of.
Is it in the roadmap?
It is in the roadmap for Q4. I mean, I'm a Solana user. It's very, very fast. So yeah, we will add that to that feature before the end of the year.
Awesome.
Nice. That'd be pretty sweet.
I'll be using
all
that. I need that. So please.
But I mean, I guess another one. Pretty sure I know the answer, but I might as well have the answers to those as well. For the long-term investors, you know what I mean, who's just not getting into it today, tomorrow, the next day, and they see the NFT stuff. They're like, listen, too much, boom, boom, boom. I don't know what's going on. I believe, Sol's gonna go up. You know what I mean? They put, doesn't matter, $1,000 into it. They don't touch it for a year. Tax season comes. Do they have to do anything with that? I don't think they would. Or I guess what would that be? Like, say it goes up from 1,000, you make, you know what I mean, $200 million. You're like, all right, well, I'm just gonna keep it there.
But it's still liquid. Yeah, like we haven't gone back to fiat.
Yeah. So if you just like an NFT holder, you don't have to do anything with taxes. I mean, you could have like a $100 million portfolio, but if you didn't sell them, you didn't trigger any taxable event. So you're fine. Yeah.
Heard that. Wish I had that much, but I definitely don't.
But if I buy a bunch of Solana and let's say it goes and I make millions of dollars, but then I start like going back and forth between stables and Solana, like all willy-nilly, does that just start triggering taxable events all over the place, and I just start like really getting killed on tax? Is that how it works?
Let's say, for example, you paid, $10 for Solana, and then now it's worth $200.
Yeah.
And now you're converting it to a stable coin. So you would have to pay capital gain taxes on 200 minus $10, $190. So
Okay.
that's how it works. So I mean, yeah, going from a coin to or NFT to a stable coin would trigger a taxable event.
Right. So every time I'm taking profit, I should probably that's the time to put the percentage aside, right?
Yep.
That
Yeah.
makes sense. Okay. Cool.
With I was trying to see because for the most part, most of the ones I had were answered with that. With the what should you do with the pastimes if you haven't done it, and
Mhm.
then I mean with trying to see honestly on most of these because you answered most of mine. You got me caught off guard on this. You got any questions for you?
I got
Oh,
another question. Yeah. Well, so you guys talk about like we're talking about the states, obviously.
yeah.
I'm Canadian, and I don't know how similar our tax laws are to you guys because everything's built differently.
Hmm.
But do you have any idea of how similar it is, or is it just you have no knowledge of that?
I do have a general understanding of how Canadian taxes work for cryptocurrencies. It's just capital gains and capital losses because CoinTracker,
Okay.
we do support US, Canada, Australia, and UK. But when it comes
Nice.
to
Okay.
NFTs, I haven't analyzed because it's not area of my expertise, but I believe that's going to get taxed very similar to, any other cryptocurrency.
Yeah. Okay. Okay.
Nice. With the this might be a not smart question because again I'm not the smartest for this crypto stuff yet. In the states and all because I'm pretty sure because again I don't do any of this stuff. You can't do any of the like. I guess can you do staking stuff like that? So no matter what it is, it's hey taxable income. It's no matter what it is, it's just like anything else for the most part. Realistically, on a profit to profit, taking that off doesn't matter if you're staking coins like your PDOC in Canada. You know what I mean? Um,
Just transactions. Every time there's a transaction, it seems like that's the key thing.
is that basically it?
Yeah, I mean, yeah, every time you have a transaction, and the way
Okay.
that IRS is saying is that if you are accessing like a higher amount of wealth,
Lot.
that triggers a taxable event. Like in the case of staking, literally every minute is a taxable event. I mean, depending on the blockchain that you're staking at, because you can see your value going up and up. Uh,
Yeah.
so yeah.
I got you. Now, like she's another in
Just don't
general
hit refresh.
question.
Just don't hit refresh. You're good.
No. With the it's more from my question because I'm gonna have to take a look at with the coin dext what is it on that one will it like know like what it was from 2 years ago things like that because me being new like I was thinking all right I gotta Google see what BTC was in 2016 on this day like does it have all that I guess written in there for the most part or
Yeah, that's
okay
that's a that's a core product, right? I mean,
roger
because
that
as soon as you connect your MetaMask or like exchange to an API,
okay
we get the information like on a per second basis from those exchanges, and then we calculate the exact value based on those timestamps. Everything is done automatically, so all you have to do is just copy and paste stuff, and you're going to see your capital gains and capital losses.
heard that awesome let's see on with the trying to see it with another one because I'm in the states so that you kind of answered most of them on there. Kind of stuck on this one for the first time. I'm like, wait a second, because I think everything I was gonna answer is the coin owner they can track everything on there. Because oh, and I guess another question I did have because I was reading I forgot exactly what it was. Say if you don't do of course in the states, say if you don't do the taxes anything like that. I think I was reading where they have like an unlimited time the IRS to take a look at I guess the past stuff compared to at least if you file stuff. You said it was the 3 months. Is that correct, or what? What was
Yeah,
that?
I actually tweeted about this, I think recently, probably yesterday or the day before. So it's called a statute of limitations. So that's a legal concept that gives the IRS the ability to come and audit you. So just because the IRS doesn't mean that they can come audit anybody. They have to abide by rules set by the Congress. So the idea is that if you properly file a tax return, IRS can only come after you 3 years from the date of filing. That's called the statute of limitation. After that 3 years, they cannot legally come after you unless you understated your income by more than 25%. If you do that, then IRS can come after you like after like 6 years. So the 3 year statute of limitation get extended to 6 years. If you don't file a return, you never start the statute of limitation. Thereby, you give the IRS unlimited time to come and audit you. So that's why I've always stood about this. Like a lot of people think that okay, I'm not going to file anything because taxation is theft. I mean, again, you can have your own opinion, but yes, the taxation could be theft. But if you don't file a return, you're unnecessarily giving IRS unlimited time to come and audit you. So I would at least file a return, start the statute of limitations. So after that 3 years, IRS cannot come after you.
Heard that. So I say someone in, hopefully IRS ain't watching. Say someone like me, well, I mean, you kind of explained it as well because I didn't really make a lot, I guess. But someone like mine, if I made a lot of money 2017, didn't, have the taxes on there just because, I was new. I thought, I thought only if you take it out, you know what I mean? It's on there. I know at that time, since you didn't, I guess, file the taxes, they have unlimited time to look at you. Say this year you do the taxes for the last 4 years. You know what I mean? Does it work like that, or is it, hey, 2017?
No, I'm pretty sure for 2017, I'm pretty sure you did file a return for your non-crypto income if you had any. Maybe you had a W-2 or something like that. So if you did that, you started the statute of limitation technically. Okay. So after 3 years, like IRS cannot come after you. However, if you omitted more than 25% of your crypto income from your overall income, then you're still under the hook because you're now in that 6 year period. So
I heard that. Thankfully, I was new and I didn't do a lot of trading then. No, that's I think it's a big question. A lot of newish people like myself will be, because I know a lot of my new buddies are doing a lot of trading things, and honestly, they were thinking, hey, it's only taxable once I take it out, or once I put this Solana to USD. I can put it USDC, or I'm not taxable, but heard that, so it's good to know at least the right information on there.
Yeah, I think that's the biggest misconception that I see, like all these new people coming into like crypto and now NFTs like that. Like, okay, I never cashed out anything. Why do I have to pay taxes? But unfortunately,
that's what I used to think too. Yeah, that's such a common I guess myth that people just tell people. Everyone believes it because they hear it from everybody else. But I guess it's not really that. Yeah, it sounds good to me. Yeah. So.
That's awesome. I know we're getting close to that time. We gotta go. What you kind of just said it as well, and I guess we said what are some of the biggest, I guess misconceptions in the crypto world other than that, or is it just kind of just that, hey, what are the other bigger things? Because you've been in it for a long time. What are those simple things that you think everyone should know that honest people don't know?
Yeah, so number one, like you discussed, people think that I never realized cash, so there's no tax obligation. That's not the case. Number two, people think that this is crypto. It's like whole everything is decentralized. IRS does not have any visibility into what I'm doing, in this decentralized world. But that's not the case. Like IRS is working with the companies like Chainalysis and CipherTrace to kind of tie these, online identities into offline people, and they have been successful in multiple cases when it comes to kind of catching people who are using cryptocurrency to do illegal activities and etc. So, and then this is something that I tweet all the time as well. Like crypto and NFT. People shouldn't use that as a method to evade taxes because there's always a permanent record about your transaction on the internet. Yeah. It's just a matter of connecting your transaction to you. And after somebody does that, there's absolutely no way that you can say this wasn't me because it's in the blockchain. It's immutable.
Yes. Yeah, 100%.
So it's a worse asset class to evade taxes. But the misconception is that people think, okay, everything is decentralized. Nobody's going to catch me, but that's wrong.
I guess kind of a last question you can answer if you can. I don't know if you'd be able to if you know. For the people that are, you know, on I guess VPN stuff like that, and you know, just that, you know, they make a lot of money and it's in X wallet from overseas. They bring it in there. You know, they get away with it for the 2 years. IRS comes, stuff like that. Is that, I guess, treated kind of same way as regular money tax ways, like tax evasion would be there, or is it like different statutes, things like that? Do you know anything like
So
that?
so using a VPN is, I can speak on behalf, like from a tax point of view, like it's not anything illegal to my knowledge. Again, I'm not an attorney. As long as you can use a VPN and you can access exchanges that U.S. residents cannot access, and you can make a ton of money. But as long as you report and pay your fair share of taxes to the IRS wouldn't have an issue how you got access to that money, because I mean, obviously, exchanges will be invoked because they're not supposed to let U.S. people in, but people are still getting away with VPNs and etc. But that doesn't have any tax implications. That's a different, like a security law related implications. So.
Heard that. That was something I've always wondered because. I'm scared to do everything, but some people, you internet, I'm doing this. I'm like, man, but like you said, it's cool. You got this.
You're going to jail, man.
You know what I mean? Like, no, they can check all my stuff. They're like, oh, I thought he had more. Not at all. But that, I mean, it all makes sense because like the people that were buying up the thug birds on the floor, I think it was saying Electric, he had a way where it literally tracked it where see how much money was in the wallet. Like you could see everything in that nature of it. So that type of stuff, yeah. If trying to play the government, I mean, they can find you, I guess, on that one.
They have like infinite resources. You can't outsmart the government.
No,
you're not gonna outsmart or outplay or anon the government, bro.
You got any questions on yourself, Money? We're getting 5 minutes to the 4:30 part.
I don't really have any. Like I said, like everything's kind of the same over here, and it's just nice to hear. Basically that like I didn't know before going into this that it was basically transactions are the most important thing. So I'm definitely going to start going back and making sure I have everything in line before tax season comes up this year, because I've been kind of slacking a little bit. I've started recently, but the stuff like 6 months ago when I was first getting into NFTs, it's just kind of a blur. So I gotta get on Coin Tracker and start doing that.
Coin Tracker, there we go. And that's always like cointracker.io, is that right?
Yeah.
Heard that.
And Solana's coming soon. ... Because a lot of people that listen to this are Solana users, so they'll be happy to hear that there's a nice way to conveniently track their taxes on their transactions. But I want to say thanks for coming on, man. It's really awesome. I think a lot of people are going to benefit from watching this. So I know I did. So thank you so much for your time. And I really appreciate you coming on, man. It really means a lot.
Yeah, thanks for having me, guys. And good luck with your taxes.
Definitely.
Thank you.
Last question for the shout out for yourself. Some people like to do, some people don't. Where can everyone find you if they wanted to? Just Twitter, or where can they find you at?
I think Twitter is the best place. I'm pretty active there at the Crypto CPA. That's my handle.
Awesome. Well, on that note, we'll go ahead and end it. Like P-Doc said, honestly, man, thank you very much for coming in here and just taking some time out of your day and letting us see what's up with that. So you have a good rest of the day, all right?
Thank you. Bye.
Have a good one, man.
Yes, sir. Till next time, y'all. Episode 5, we are out and about. Stay fresh, stay clean, stay positive, stay caw-caw. Till next time, y'all. Mahalo, mahalo.